Security is a matter that people have on their minds here in Germany, given that Germany's economy is so dependent on exports. And also, of course, the expectation that Trump will give the economy a boost has another side to it, because it's likely to have increase effect on commodity prices, an increase on energy prices. That's why German consumers are concerned about potentially rising consumer prices due to, fuels and energy becoming more expensive.
Well, I guess Trump policies are what most governments will probably have to learn to deal with for some time. Now, let's look at some of the corporate earnings coming in. We've seen a raft of them. Talk us through about Peugeot, that's considering its takeover bid with General Motors.
Well, the numbers, the earnings report and the full year report for 2016 show that Peugeot really has made an impressive turnaround. Remember, only 3 years ago, this car maker in France had to be saved by the French state and by Chinese investors. Now, for the last year, Peugeot reported an 80% increase of profits. The operating profit margin, which is an important factor indicating profitability, rose by 5%. The share price of Peugeot, or the company is called PSA, at the exchange is not on the rise. It's down around about 3% at the moment. We have to keep in mind that this share price increased nearly 90% in only 7 months, so a certain potential for profit-taking is there. But also, the profit-taking has to do with the uncertainty round about this planned purchase of Opel Vauxhall by Peugeot. At the moment, there's a lot of talk on the political level. Politicians in Germany, also in the UK, where, Vauxhall has its factories, the politicians are trying to save jobs, while on the other hand, of course, Peugeot is expected to try to save money with this takeover. And despite what Peugeot's boss says at the moment, that he wants to, protect the jobs in Germany and also the UK, most analysts for the car sector expect that Peugeot will close factories of Opel and or Vauxhall after a potential takeover takes place. So these uncertainties are on investors' minds today, and they cause this profit-taking in terms of the shares.
Right, Conrad, we'll sure keep an eye on that tie-up between Peugeot and General Motors. Thank you very much for your time, and do have a wonderful day. We move over now to the U.S., where the stock index futures pointed to a flat but higher open today as traders waited to hear from the new Treasury Secretary, Steve Mnuchin. Traders are hoping Mnuchin will reveal what President Donald Trump's tax reform plan will look like and when they might see it. On the earnings front, Hummel, Food, Kohl's and AMC Networks are among companies set to report before the bell. Baidu, Gap, Hewlett-Packard, Intuit and Nordstrom are among companies set to report after the bell. On the data front, initial jobless claims are set to come out at 8:30 a.m. Eastern Time, with the Federal Housing Finance Agency Home Price Index set to be released at 9 a.m. Thursday will also see the auction of $28 billion in 7-year notes. Markets in Asia were mostly lower today following a mixed close in U.S. equities overnight, as minutes from the Federal Reserve's previous meeting hinted that a rate hike is coming fairly soon. In Japan, the Nikkei 225 finished nearly flat at 19,371.46, while across the Korean Strait, the Kospi was fractionally higher at 2,107.63. Hong Kong's Hang Seng Index was off by 0.38% in afternoon trade, while Chinese mainland markets were mostly lower. The Shanghai Composite closed down 10.13 points, and the Shenzhen Composite finished near flat at 1,991.98. Australia's ASX 200 fell 20.43 points, with gains in most sectors offset by a nearly 2% drop in the materials sector and a 2.03% decline in utilities. Kenyan banks are in talks with the government about changing a law that caps commercial interest rates as lending in East Africa's biggest economy slows. Kenyan President Uhuru Kenyatta introduced caps on lending rates in September last year against the advice of the country's central bank and the Treasury, fulfilling a campaign pledge he made before coming to power in 2013 that he would lower the cost of loans. The Kenya Bankers Association is currently assessing the impact of a slowdown in credit growth on the economy so it can present evidence of any damage to the government. Meanwhile, Barclays Bank of Kenya says it will focus on growing its non-interest income after a jump in bad debts and a government cap on lending rates cuts its 2016 pre-tax profit by 10%. The cap on lending rates introduced last September was expected to squeeze margins and profits at Kenyan banks. The cap limits commercial bank lending rates at 400 basis points above the central bank rate, which stands at 10%. The bank's pre-tax profit fell to 10.85 billion shillings from 12.07 billion shillings a year earlier, hurt by increased provisions for bad debts and the rate cap. Revenue rose 8%. Economists have said the interest rate cap risks hurting economic growth by discouraging lending to smaller borrowers who are deemed more risky. Still on Barclays earnings, but this time in South Africa's Barclays Africa. The company has missed estimates with a 5% rise in annual profit as higher interest rates at home and sluggish growth elsewhere on the continent hit consumption and investment spending. The South African lender, majority owned by Barclays PLC, said diluted headlines EPS came in at 17.69 Rand in the year to end December. Barclays Africa's results come a year after its parent unveiled a major strategic overhaul that included plans to sell down its stake in the African unit. Barclays PLC today agreed to pay Barclays Africa 12.8 billion Rand to fund investments required to separate it from its African units. Sealing the separation agreement terms paves the way for the British bank to reduce its stake to below 50% under a strategy which will see it focus on the United States and Britain. Well, we'll take a quick break now, and when we return, of course, the program continues as we look at the commodities market. So stay with us.